All right, everyone, buckle up. We're diving headfirst into the exhilarating, maybe even slightly terrifying world of market predictions.
That's right. And today, we're looking at a bold one.
Oh, yeah. We're talking about Eric Jackson's latest. He's the CIO of EMJ Capital. And let me tell you, this isn't your grandma's market forecast.
Not even close.
Jackson's calling for something big, something huge, something, well, he calls it an everything rally.
And everything rally. Catchy, right?
Yeah.
But also kind of a lot to unpack there.
Exactly. So what's the deal? Why is Jackson suddenly so optimistic? What's he seeing that everyone else might be missing?
Well, to understand that, we kind of got to dust off the history books. Think back to 1982 for a second. Interest rates were through the roof. Everyone was freaking out.
Some familiar.
Right. But then, bam, the market takes off. Like, really takes off. One of the biggest bull markets in history kicks off right after interest rates peak. And guess what Jackson's seeing right now?
Let me guess. History repeating itself.
Bingo. Jackson sees some really compelling parallels between then and now. Interest rates seem like they're peaking. The yield curve is starting to act a little more normal.
Okay, gotta pause you there for a sec. Yield curve. It's a term I feel like everyone throws around, but do we really understand it?
It's honestly not that complicated. Think of it like a seesaw, right? On one side, you've got short-term interest rates like what you get on a savings account. On the other side, long-term rates like government bonds.
Gotcha. So the longer you lock your money up, the better return you expect. Makes sense.
Exactly. So normally the long-term side of the seesaw is higher. But when it flips, meaning short-term rates are actually higher than long-term, that's the warning sign.
The dreaded inverted yield curve everyone talks about.
Right. It can be a precursor to a recession. But Jackson's point is the yield curve's starting to correct itself. Long-term rates are dropping closer to those short-term rates.
So the seesaw is becoming more balanced, but why does that matter for this everything rally idea?
Well, it signals that the economy might be in better shape than people think. And a healthier economy paves the way for a broader market upswing.
Which brings us back to the everything rally. But, and I gotta ask this, what about the B word?
The bubble. Yeah, that's the million-dollar question, isn't it?
Yeah.
Every time the market gets a little frothy, everyone starts shouting, "Bubble?" from the rooftops.
Totally. I mean,
Yeah.
we've seen it before. The dot-com crash, the housing crisis. Those scars run deep. So is this time actually different?
Jackson argues it might be. He says, yeah, everyone's a little too quick to slap the bubble label on any market upswing these days. He even tells this great story about a tech conference back in 2009.
Oh, I remember that. Right after the 2008 crash, everyone was convinced tech was a bubble about to burst again.
Exactly. But look at what happened. That was the beginning of a massive bull market, particularly for tech. Those who were brave enough to jump in, instead of fearing the bubble, made a killing.
Okay, I see where he's coming from. But what's making him so sure this isn't another bubble?
He points to companies like Nvidia and Microsoft. They're not just doing well, they're absolutely crushing it, even with the recent market volatility.
That's true. They've had some incredible earnings lately.
Exactly. And it's not just them. Think about the underlying forces at play here. AI, for example. This isn't some passing fad. This is a fundamental technological shift that's going to transform industries for years to come.
Okay, so we've got this potential 80s redux happening with the interest rates and yield curve. We've got tech giants defying the bubble doubters with their AI-powered growth. But here's where Jackson's prediction gets even more intriguing. He's saying this rally isn't just about the big players anymore. He's looking at smaller tech companies, mid-cap stocks even.
Chinese equities.
I was just getting to that. He calls them late to the party. What's he mean by that?
Well, think about it. Those mega-cap tech giants, they've already had their moment. They've seen those massive gains over the past decade. Jackson's suggesting that this everything rally, if it materializes, could be what lifts up those companies that haven't quite had their breakout moment yet.
Interesting. So we're talking about companies with huge growth potential, but maybe they're just flying under the radar for now.
Exactly. They might be smaller, more agile, and poised to benefit from this next wave of innovation and economic expansion. And yes, some of them might even be overseas, like in China.
Okay, so China, that's a whole other conversation, right?
It is. And to be fair, Jackson acknowledges that the global economic picture is far from rosy. He's got some concerns about weakness in markets outside the U.S. and Europe.
Yeah, those storm clouds are definitely gathering.
For sure. But here's the thing. Jackson believes that those big tech companies we talked about earlier, The ones with the sticky subscription models.
You're talking about Microsoft, Apple, all those services we practically live on.
Yep. Those companies might be more resilient to a downturn. Think about it. Even when the economy is shaky, are you really going to ditch your Netflix subscription or your Spotify? Or, your Microsoft Office suite that you need for work?
Probably not. Those are pretty ingrained in our daily lives at this point.
Exactly. Those recurring revenue streams provide a level of stability that other businesses might not have.
So it's like a safety net, even if the broader market gets a little wobbly.
You got it.
Wow. Okay. So much to digest here. An everything rally, 1982 flashbacks, resilient tech giants.
And don't forget those late-to-the-party companies.
Right. It's almost too much for one deep dive. But hey, that's what we're here for, right? To unpack these complex ideas.
Absolutely.
So is Eric Jackson right? Is this really the dawn of a new everything rally?
Only time will tell, right? But he's definitely given us a lot to think about.
He certainly has. And it raises an interesting question for all of you listening. If Jackson's right about this broader market participation, what industries or sectors are you most excited about? What hidden gems are you watching?
Do your own deep dive, folks, and let us know what you find. There's a whole world of possibilities out there.
That's right. And who knows, maybe you'll be the one telling us about the next everything rally before it even happens. All right, that's it for a deep dive today. Until next time, happy investing.
See you next time.